goal for today is to share with you another sales idea. And with everything going on during this pandemic, budgets are tight, but the need for life insurance is still at an extremely high point. I've been talking to underwriters over the last couple of weeks, some of the cases we've been submitting. Actually, I had one that was postponed yesterday for one of our agents because of COVID-19. So these insurance companies are being a little bit more cautious than before because they just don't know, the ramifications of COVID-19 for the long term. So, something to think about when you're talking to your clients is, let's lock in your insurability today with life insurance. And then in the future, if we need to make changes to that, whether that be a permanent product or another term product, let's just go and do that today. So a good option to present to your clients is having this annual renewable term because it's very budget friendly. Okay, it's a product that most people can afford, and it protects their insurability today, so you can then plan for the future. So let's take a look at it and see what it is and how it works. We'll be talking about two companies today, which are our favorites, National Life and American National. And the reason for that is because of all the living benefits that are attached to the term products and this annual renewable term as well. So let's get into it and talk about the first one with National Life Group. So an annual renewable term is an annually renewable term life insurance contract guaranteeing premiums which increase annually. It's not a level term. Level term is going to give you the same premium every single year. Annual renewable is going to go up every little bit. And we'll show you here after I talk about National Life an illustration to kind of show you what that looks like for you and for your clients. But the great thing about it is that it has the lowest initial premiums. It's going to be the cheapest insurance you can buy. And of course, all premiums are based on your age, as any life insurance product would. It is designed for individuals or even businesses wanting that low-cost insurance protected for a short period of time, which is ideal for what we're looking at today. Somebody who might have been laid off today will probably hopefully get another job in a year, hopefully, if not two. Well, this allows them to get that life insurance coverage today and still makes it budget friendly. With National Life, issue ages are 18 to 85. So this one goes all the way to age 85. You'll see in a moment, American National goes only up to 65. So you can insure the older people if need be when it comes to this annual renewable term in this solution here. But the minimum face amount is going to be $100,000 as a starting point for the annual renewable term with National Life. And when does the term end? Well, it ends at the age of 70 or 10 years from date of issue, whichever one comes first, okay? So it's only good for 10 years when it comes to the ART, okay, with National Life. So something to think about, again, is designed for the short term, not for the long term. The goal when selling the annual renewable term is to convert. That's the whole purpose of having this solution in your back pocket, is because you can exchange it for a different product. Now, National Life allows you to exchange it for a permanent life insurance policy only, okay? Only permanent life. So that can be the IUL, that can be the whole life, that can be the new UL that they just launched recently. So permanent life insurance only with National Life. And you can convert up to the face amount. So if a client buys $500,000 of term, they can convert up to that amount. They can't go more than that, okay? And you cannot go and get another term policy with National Life. It's either the ART and to permanent only, okay? So that's how that's going to work. But if the client wants to do less than what they had, then that's fine too. Just can't do more, because then that requires underwriting again, okay? So the goal is if you can lock in the right amount of life insurance today, then you have that flexibility to convert, up until that amount. And ideally, you want to do that, within, 2 or 3 years at most, because then the cost of the annual renewable term just keeps going up, and then it stops becoming budget friendly. So the idea is to convert as quickly as possible. with this product. And luckily with National Life, they offer some conversion credits, okay? And this is offered on all of their products, but specifically the ART. The way it works is, now stay with me here, okay? I'm gonna read you the description of the conversion credit and I'll explain to you how it works. So the conversion credit is equal to 12% of the first year premium of the permanent product, okay? Or 1% per completed term contract month during the first policy year of the term policy. So what does that mean? That means if you decide to convert a term policy, let's say to an IUL, okay, that's typically what we'll be doing in this scenario here. Whatever the premium is of the new product, which is the IUL, you get 12% of that premium put into the cash value. So for example, if right 100 a year, let's just say for simple math on the term product, and you convert to an IUL, which now is $1,000 a year in premium payments, you would get 12% of that $1,000 one time dropped into your cash value. Well, 12% of $1,000 would be $120 as an example, will go into your cash value when you convert to the IUL. It's just a one-time deal. It doesn't matter how long you keep the policy, whether you keep the policy for 1 year or up until 10 years, it's just 12% of whatever that first year's premium is in that converted product, which is the IUL in this example, okay? It doesn't accumulate over time. It's not 12% every single year. It's a one-time deal. Now, if you convert within the first year, that's for the 1% right here per month. So if you convert 6 months after the fact, you only get 6%. If you do 10 months after, you get 10%. If you do 15 months after, you only get the 12%, okay? It's just a small little bonus that they give you to kind of encourage you to convert over to a permanent product. It's not a big deal, but it's something that helps, you know, show goodwill that, hey, you had a product with us, we're letting you convert it to an IUL, we'll give you a small little credit to go towards the cash value. And that's it, 12% as the max that they'll allow as a one-time deal, okay? You have to request this conversion before the end of the conversion period in order to be eligible for this credit, which makes sense. And for this example here today, the ART, that conversion credit is only available up to the 5th policy year in this example, okay? So after that, if you decide to convert, you don't get the credits. It's only up to the 5th policy year is how National Life has designed this conversion credit, okay? All right, so now let's go over to National Life and let's take a look and see what that looks like. So we log in to their website. We go to illustrations. We go to new illustration, and you go and select term as your product type. And it will be here in the LSW term. Remember, when we do term, we want to pick LSW, not the National Life product, because we're independent agents, and LSW is what we sell. So go to LSW term. You enter the client's information here. You put the date of birth or their issue age. We'll leave it here just at 45 for simple math. And remember, we always like to quote the standard non-tobacco or standard tobacco because we never know what their health rating really is because we don't know their background. So let's under promise, over deliver. So let's do a standard non-tobacco rating. Let's go to death benefit and funding. And let's just change the face amount to 500,000. Okay. And we'll keep the premium mode monthly. It's the easiest way to share this information. And, you know, with the riders, we know that we have living benefits there already, so we don't have to touch that. And we just do a quick view. So now you'll see for this client here, the ART is only $29.48 a month for the first year. Okay? Now we have all the other solutions here as well. You can see the 10, 15, 20, 30. Obviously more expensive, but you're locking in the 30 year at a level rate versus ART goes up. And you'll see here in the first year, $353 total is for the annual premium. But look how much it jumps the second year, $696. Third year, $760. Fourth year, $828. A big jump from the first to the second year. So the goal would be to convert this as quickly as possible into either into a permanent product when it comes to National Life. That's a big difference. I mean, if we pull up the calculator here, we take a look at 696. 96, you divide that by 12, it jumps up from $29.48 to $58.05. So quite a big jump. We're looking at $28 a month. It makes a big difference for this client here. So that's what you have with National Life. Okay, let's go back to the presentation. Let's talk about American National. So American National's product is also a one-year policy that automatically renews at the end of each year, and the premiums are guaranteed for the first 10 years. Okay, but they increase each year because of your age, just like National Life or any ART for that matter. Okay. The difference is, though, you'll see in a minute when we do an illustration, is the way that American National designs their ART over the 10-year period. The premiums paid into the ART are designed to be comparable for the 10-year level. So you'll see here in the little graph, it starts lower on the ART, but goes up over time. As compared to the 10-year level, it's the same price every single year for the first 10 years, but it's about the same. When I was talking to them about this product, they were telling me, on average, you're going to see the cost be more expensive on the ART around the 7th to 8th year is where you're going to see the difference of, okay, now it's a little too expensive to have this policy. But again, the purpose of having or selling this product to your clients is to convert as quickly as possible. And we're going to show you here in a minute what that looks like with American National. Issue ages with American National is 18 to 65, as compared to National Life was 18 to 85. Minimum face amount is the same at $100,000. So that's where this product begins with American National. Now, what we like about American National is that you're able to convert this ART into a permanent policy, but also into a term policy. Okay. I haven't seen very many companies that offer an ART conversion to another term. With American National, they only allowed the conversion of the ART to a 20 or 30-year level term. Not 10, no 15, has to be a 20 or 30, and it has to happen in the first 3 years of the policy, which is perfect because that's what we're trying to do anyway. We're trying to protect the client for a year or two at most by having this program in place, but then we're going to convert it to something else. Unfortunately, there is no conversion credits with American National, but it's okay. I mean, National Life's only offering 12% of the new premium for the cash value, so it's not that much of an incentive, but it's something there. So the nice thing about this is you can convert the ART to a term, and then you can convert the term into a permanent product, either an IUL or a GUL. So the potential to get, 2 or maybe 3 sales is high when it comes to this solution here. So if you were to go down the route of ART, I would, obviously look at all the options, but this may be one of the better options because of the fact that you can convert to a term, then the term into a product. Okay. Now you can convert this ART at a partial. So for example, you do that $500,000 initial protection, and you only convert $250,000 of that, let's just say, into a permanent product or a term, whatever you choose. You cannot keep the other half of the ART. Whatever you decide to convert, if it's not all of it, the rest will be terminated. Okay, so you can't keep a partial out there. It's either all, a portion of it, or nothing else. Okay, so it makes sense. I mean, you're going to convert, might as well do it the right way. Okay, so that's the beauty of having American National as the ART as you convert to a term and then the term to a permanent. Okay. Now let's go to their software and let's take a look and see what that looks like. When you log into American National, I was already in it. Let's see here. Okay. So we go to the expert office and we go to the expert illustrator. You go to create the client. You do a Mr. Client. Let's do today's date. Oh, sorry, date of birth. So if he was 45, that would put him what, 1975? 45 years old, male. Okay. Action, new illustration. We want to select the plan type to be term. And there's our term right there. Create. And then we have our term part here. Then you have your term periods. We have the ART, the 10, 15, 20, 30. In this example, we're going to choose the ART. Let's do the same face amount, 500,000. Change the mode to monthly. And that's it. We go to values. And we can take a look and see the monthly EFT. Oops, sorry, I need to change it. I have it as preferred. Let me change it to standard to keep it the same. So do standard nicotine non-user. So we can compare the values side by side. So we're looking at monthly EFT of $28.94. So let me see if I can split my screen here for y'all so y'all can take a look and see. Comparison. There we go. Okay. So we compare the American National price point here. First year, annual premium $347. First year, National Life $353. So very comparable, a couple dollars off, not much of a difference annually. Look at the second year with American National, $419.88. National Life is $696.96. A little bit higher on the second year, a little bit cheaper here. Third year, $482, $760. Fourth year, $444, $820. So you can see that for American National, what they're doing is they're keeping that price point a little bit lower. So it's a little bit cheaper for initially during the first couple of years. But again, the goal would be to convert somewhere between the first 3 years in order to take advantage of either the term or the permanent solution. And the nice thing that we talked about is they all come with all living benefits, both these products. So the family's protected, God forbid something would happen from a terminal illness, chronic illness, critical illness perspective, right? So the family's protected with those as well. So you really can't go wrong by offering this solution, but it has to be designed for a short term, okay? Like Art's in the beginning. The first plan is, we want to try to give them the best solution possible. If we can get the IUL, that's the goal, right? Because that provides the best protection, the best coverage, gives tax-free income. That's what we're trying to shoot for. But sometimes that's not as budget-friendly as we would like, especially during these times. So we go to plan B. We can take a look and see whether we decrease that amount of the IUL or increase it, see if that's what works best for them. If not, we go to the term, right? 20 or 30 years. That's what we want to shoot for because that gives them the best protection possible. If they're still saying, nah, it's not going to work for me, or that there could be some financial strain there, hey, let's get you something in place. Let's look at an ART. Here's your protection now. It's way cheaper than anything else that's out there. You're protected. In the future, we can then convert that to something else once employment looks better, once finances look better, and it just gives you that potential sale, and you start building a relationship with that client because now you have to stay in contact with them because the goal is to convert within, hopefully within 12 months, if not within 24 to 36 months, and that allows you to give them that protection they need. And then in the future, get you that extra sale potentially, right? To either another term product or to a permanent solution. So it's a great sales strategy during these great pandemic times that, have better conversation with your clients, because remind them, you know, not that I can't say for certain that if you get COVID-19 that you're not insurable, but the insurance companies are being way more cautious. They may postpone. They may say, we got to wait 3 months, to make sure you're healthy, or maybe wait 6 months. Right now, there is an undetermined amount of waiting time if somebody tests positive, whether or not they will qualify for life insurance or not. So let's lock in your insurability today before something happens and protect your family. So that's the beauty of having this in your back pocket, using the annual renewable term as a new sales strategy.